Hello, good morning in Europe and good evening in the States. This is Ahura with another daily outlook video. This video is fine and great for day tradings and as well as for long-term investments because of the fundamental data and information that I'm going to share with you. Let's see what happened yesterday. Yesterday in the stock market, Amazon missed the expectation of both EPS and revenue. So, but Apple, what happened for the Apple? Apple could beat the EPS expectation, but missed the revenue expectation. At the same time, we had information, we had the data from the labor market and GDP. GDP in the state missed again. GDP also missed the expectation. The initial estimates for third quarter GDP the initial estimates was 2.7%, down from 6.7% of the previous quarter, which came at 2.2%. Sorry, at 2%. Sorry, which was the estimates for was 2.7%, but the actual number was 2%, which it was way lower than the market estimates and market expectations. But at the same time, initial jobless claims fell to 281K, much lower than previous weeks and previous months. It shows that the labor market is getting better and is coming in a better situation. But let's see, this is the chart, this is the VIX chart. As you see, the market risk is increased. This risk, increasing risk in the market, again, all the way towards 16, like almost 17. It shows that, as I told yesterday and days ago, as long as we are getting closer to the end of to Friday and to the next week, the market risk is increasing because the biggest companies that listed in the S&P 500 already they published their estimates, they published their earnings. So we already know, just like in the general, what is going on in the stock market and what we have to expect from the stock market. I will talk about that later if I can make it some like few minutes video in a weekend. I will do that to explain what generally happened in a week ago, like in the last week. Totally, the stock market is doing not bad, but I cannot say that's good because of the shortage that we have in the labor market and raw materials. They're going to affect the production, they're going to affect the production, they're going to affect the service sector and everything for the next quarter. So the GDP, while for the third quarter GDP missed the expectations, we are expecting to see the same, to lower GDP in the fourth quarter. And third and fourth quarter together, they will affect the yearly annual GDP numbers for 2021. So these numbers can tell us that maybe we cannot expect the market just like to be as good as it was expected before. So we can kind of, the late yesterday's numbers was kind of in a favor for the dovish fans. That's why you can see the US dollar index fell sharply, because the data is telling us that the weakness that we can see in economic development, we cannot go so fast to the hawkish policies. So if we cannot go that fast as it was expected before to the hawkish policies, so the dovish fans will be in a little bit stronger position. That was the reason to see the US dollar index down. But another important point that we have to watch, if you go to the EURUSD chart, and yesterday's this is the EURUSD chart. If you watch the EURUSD chart, you can see that yesterday euro aggressively gained against the US dollar, and the main reason for that was Miss Lagarde's press conference, not the data from ECB meeting. As you know, in the ECB meeting, there is nothing changing in interest rates, nothing changing in PEP, nothing changing in asset purchasing program, nothing. So the reason that it's the euro gained that much and the US dollar actually also the loss that big was the accepting of the Miss Lagarde's about the inflation, about the higher inflation. Ms. Lagarde in his announcement, in his in her press conference, accepted that the inflation is a real concern and it's going to be still higher in a short term before it goes down at the end of the 2020 or 2023, 2022 or beginning of 2023. So this expectation of higher inflation for the next several months, it was the reason for increasing the US dollar. So the inflation, even in Europe, which was not that much concern, which they didn't have that much concern in the previous months, in the previous weeks, while we had so much problem in the US, it means that most probably in the next week, when the Fed will have the meeting, we probably can see the same reaction. We can see one of what this is if you watch the spread between the 10 and 30 years bonds yields, if 10 and 30 years bonds, the spread between the yields of the 10 and 30 years bonds, you can see this difference. The spread is getting tighter. And this tightening spread is telling us that we have to start a little bit hawkish policies. So when the spread between the 10 years and 30 years bond yields is increasing, so it means that the economy is not is fine. I mean, the inflation is fine. When they are getting closer together, what it means that, or I can say that 10 years bond yields is increasing. It means that not just in a long term, in a short term also we are waiting for the higher inflation. So it means that the central banks should go to the hawkish policies, should they start the hawkish policies. This starting a hawkish policy, even thought if just like, let's go and check the S&P 500 chart. This is the S&P 500, a new records, and every day just like close to the new records again. But still, it couldn't make it because of one of the reason was the Amazon. Amazon was, as I told, the Amazon missed expectations. At the same time, these numbers that we saw in yesterday's, what is telling us is this. So today, today the stock market will have its latest power to move higher with the Chevron Mobile, with the Exxon Mobil and Chevron earning reports. At the same time, but from the next week, it will be under pressure, as I told and several times mentioned in the last weeks. Another side in the between the between the House and White House, between the House of Representative, the House of Representative and Representative, and White House. It sounds like the conversation is getting closer to some deal. Probably it get Mr. Biden in his interview. I think if it is, I don't remember with which newspaper. He mentioned that they are making some changes. So if they are making some changes, we can see that first of all, the problem is right now between not between the Republican and Democrats. The first stage, Democrats, they have a problem between each other. They have the misagreements between each other. But sounds like with some changes that they made, probably this aggressive kind of aggressive or progressive. This is the progressive, but probably I can use sometimes the aggressive. Democrats also they can aggravate. Mr. Sandy. Why I'm just forgetting the numbers. Mr. Sanders and some of other Bernie Sanders and some of other some of Democrats probably with the changes that the total is coming to this plan, probably they're gonna agree with that, and we will have this law. We will have this. I'm sorry, just. Yeah, so probably we will have it passed in next days, and then go to the Mr. Biden's table to sign and to come to the act. So this is fine. This is just in a general what is happening there between the White House and between the House to see what is going on between this. The thing is that most probably it will be passed, and when it's passed, it means that the economy have another kind of stimulus. That was another reason for yesterday's, as you see that yesterday's increase that you saw in the market, you did in S&P 500 chart. This was one of the reasons for that. We could see that in let's check the NASDAQ chart. This is the NASDAQ. NASDAQ was much better between the other indices, with printing a new record high yesterday, because with this new law, with this new kind of with Mr. Biden's plan, probably the green not probably they are supporting too much the green energy, and they are supporting too much the technologies, tech companies. So the green energies and tech companies, they're gonna take advantage of that. So probably it will be much better for them. At the same time, the big companies probably, but it's not actually in this plan. It was one of the biggest disagreements between the Republican and the Democrats about the taxation. So since the taxation is cut from this plan for the moment, to kind of just pass at least a part of this plan, probably it will support the big companies, because we don't have the taxation, just a higher taxation for the big companies at the moment. Probably we're going to have it later this year, later next year. But right now, in this this plan, in this what is going to be passed in next weeks, we don't have it. So probably it will help the tech companies in a short term, before we go to the next taxation plan in 2022. So this is generally in the market. But as I told, inflation is the main concern, and as the inflation updates yesterday helped the US dollar to fall down and euro to gain too much sharply, it was inflation concern in Europe. So we can see probably same thing in the next week in the US. So then we can see the US dollar index to recover sharply, and again and even more sharply than before. If we go to from the technical side, we didn't still with this correction that we saw yesterday, still it couldn't push the downtrend trend line, so it's still in an uptrend as long as it's trading about 93.20. So reaching higher levels in the next days is what we are expecting from US dollar, as much as we are getting closer to the Federal Reserve meeting in the next week. So we can see the in H4 chart, we can see that OBV trend line also burst, over downtrend trend line also burst, and we are again in an uptrend. So the US dollar index again can continue higher, while we are waiting for a little bit weakness in the stock markets for today. This is generally what happened. Let me check. Yesterday, the labor market I told, GDP I told. What else yesterday we had to talk about that? Yeah, this is the most important data that we need to now till like what happened in yesterday. But today it is very important in economic calendar, as we will have let me refresh just a page. Today is very important as we will have the CPI numbers first in Europe. European inflation numbers will be very important to watch, and then later in North American season, while we have PCE price index numbers in the United States, we should follow the Canadian GDP as well. The PCE price and the core PCE price will be very important for to watch, because it is the inflation measure that the Federal Reserve is planning based on that, which is very important for the FOMC members, while the Canadian GDP also must be followed closely. These PCE numbers and core PCE numbers are very important, especially this week, because that just like few days, this is a few days after that we will have the FOMC meeting, so they will have the inflation numbers before deciding about the next step of the monetary policies. So that's why it's very important. So it will give us some signal that what we have to expect from next week meeting. As I told, in Europe also we have the European inflation and the German GDP, Canadian and German GDP, or the GDP numbers today to watch. So thank you so much for watching, and hope it was useful for you. Please write the comments. In the comments, write me your idea, what you think, what is your What do you think it's better to do, what to add or to cut from this, and how to make it to be more useful for you guys. Thank you so much, and goodbye.